What's up, guys? It's Rob here, and we need to talk about the most recent inflation report that just came out. The CPI numbers came out today, and they didn't look very good, all right? The stock market's moving down in a pretty big way based off of this report, and you can see what I'm talking about right on the chart. As soon as these numbers came out, boom, everything was dropping down pretty dramatically. Now, we talked about the fact that today might not be the best day for the stock market in yesterday's video, and it certainly hasn't been. We're down 2.6% in the SPY. Tech-based stocks are down about 3%, and so are small market cap stocks. So everything is moving down in a pretty dramatic way based on these CPI numbers and consumer sentiment report that just came out. So we're going to talk about both of these, what caused them, what we might be looking for in the future, and what could be happening. So first off, the forecast for the inflation that we were expecting was 0.7% increase. What we actually got was a 1% increase. Now, this was somewhat predictable, right? In fact, if you are actually looking at the numbers for what came out, we were anticipating that the price of oil and gas and fuel would be going up pretty dramatically because we have been watching the prices here. On CNBC, you can see the price of oil has been rising over the course of May. And in June, the scary thing is we're likely to see even more increases because June, we haven't had a day in June that's actually been cheaper than in May. So unfortunately, the price of oil and gas has only continued to rise. And we have seen elevated levels in May as well as in June. So the price of oil and gas, or energy overall, really went up about 4%, 3.9% to be exact, but 16% in the price of oil. Whereas in the whereas in the previous months, we were seeing deflation in these categories, which actually overall led to a lower inflation number, 0.3% in the month of April. Now we're up at 1% in May, bringing us to 40-year highs annualized for inflation at 8.6% year over year. Inflation numbers, really bad stuff, right? The highest that we've seen in the past 40 years, beating out what we saw in March, 8.5%. So not the best, right? Not the best, not what we were hoping for. Unfortunately, inflation is on the rise, and what this could really impact, in addition to, obviously stock prices, is what the Fed is going to do about monetary policy, okay? The Fed is going to be implementing new monetary policy come Wednesday, June 15th. All right, so in just a couple of days, we're going to have the Fed's economic projections, a statement from the Fed, a press conference from the Fed, and also their interest rate decision. Now, our best guess is that they're likely to raise rates by 0.5 percentage point. That's what we've seen in the past. That's what a lot of Fed members have been hinting at. That's what they've been saying they want to do. After this most recent inflation report, we'll see if that's the case. I mean, hopefully it is. They could blindside us and raise them by 0.75% or even 1%. I don't think they would do that. That would probably have a pretty detrimental effect on the market. Every time they raise rates, it's never too good for the stock market because it creates an inverse incentive to invest, right? You're more likely to keep your money in a savings account that's yielding a higher interest rate than throw it in the stock market if they're paying higher interest rates, right? You'd be more willing to just let the money sit and collect a guaranteed rate the higher they raise that to. So overall, we're hoping that if you're an investor, you don't want to see the interest rates going up that much. But the Fed is trying to combat inflation. They may end up doing that to try to curb spending a little bit because it wasn't just the price of oil and gas that was rising, right? We saw the price of used cars flip. We were looking over the past 3 months, we were seeing deflation in the price of used cars and trucks, down 0.2%, down 3.8%, then down 0.4%. And this month, we actually saw an increase of 1.8%. Now, the same thing happened with apparel. We had deflation in apparel the month before, in the month of April. And then, once again, that flipped to a positive 0.7% in May. So we have not had one deflationary category in this month, leading to an overall fairly high reading, right, of 1% month-over-month inflation. And hopefully that won't be the case for long, right? We are seeing, Biden was speaking live just a couple of minutes ago. I was listening to it. Mostly where the blame is being placed is on Russia and Ukraine and the war going on there. In fact, Biden called this inflation Putin's tax on the American people. So we'll see how long that narrative plays out, right? I mean, inflation was here. You can see long before we actually saw the war in Ukraine happen. But overall, it certainly hasn't helped. We have seen the price of oil and food skyrocket quite a bit since that's happened. So obviously it is a contributing factor. But I think the main factor was just how much money has been printed over the past 2 to 3 years. It's really been monumental amounts. And that makes me feel that money is probably the last place I want to actually park my store of value, right? I really don't want to be holding too much cash during a highly inflationary period. I would much rather be invested, even though the stock market might have its ups and downs. I would much rather be invested in assets that are not cash, because so much cash has been printed. It really doesn't seem like the safest place to have my store of value, especially regarding how much inflation we've seen over the past couple of months and years, right? That's really not where I want to be parking my store of value. So overall, guys, keep in mind, not financial advice, just my opinion, just letting you guys know what I'm thinking about the whole situation. I will say before we end this video that one place where I do have a decent store of value is in gold and silver, right? Gold and silver are two assets that I think could be doing pretty good during a highly inflationary period. You can see that gold and silver have both been doing good since this inflation report came out. They've both been moving up a decent amount. So we'll see if that continues. That's just one other thing to keep in mind. Once again, not financial advice, just my opinion. And if you guys appreciate that, feel free to subscribe to the channel. And other than that, guys, I hope you have a great rest of your day. I'll see you in the next one. Bye.